Alexandra Mers, aka Tesla Boomer Mama, finally does it. Tesla gets investor grade. Twitter overhang. Is it done? Is it even going to close? And my prediction about when I think the Fed will officially U-turn. Welcome back, everybody. If you're new, my name is Nicholas, and this is Investing Against the Grain. All right, so we got a lot to talk about in today's episode. Before we get into it, just because I have family out in Spain, I have two little brothers who watch this every morning. Just wanted to say good morning to you, Ale. Good morning to you, Max, and Natasha. I know you're here in the back, listening in the background, so good morning to you as well. All right, now, aside from my own personal stuff there, let's dive into, first of all, this Tesla upgrade from junk to essentially investor grade. Now, I think the big thing everybody is wondering is we've been waiting for so long to get this investor grade. Alexandra Mers, Tesla Boomer Mama, if you guys don't follow her on Twitter, I don't know what you're doing with your lives. Go follow her. She's excellent. But she's been pounding on the table, putting all kinds of presentations together, getting the word out about how Tesla should have been investor grade a long time ago. And then today, S&P finally boosted Tesla to investor grade. Now, the big question in everybody's mind is why? Why today? Why today out of all days? Why not wait until we get quarterly earnings from Tesla on October 19th and they can see the numbers and they can actually have some rationale behind what they're doing? Well, there's many different reasons and we could speculate all day, but at the end of the day, it'll just be that speculation. So I don't want to waste too much time on that. Instead, I want to focus on why the stock was down today. Let's take a quick look at Tesla's stock price and how it fared today, because I think this will give us a good view into what happened. So let me zoom all the way out here. Okay, so here we can see everything going on. You can see initially, I think this was around, maybe a little bit later. Yeah, sometime around here. This is when we got the news about the investor grade, and then from here it just sold off. Okay, so the question is why? Why did it sell off? If this is something that we've been waiting for so long, if this is supposed to bring in all of these institutional these hedge funds and these fund managers that can only invest into investor grade companies, why didn't we all of a sudden rally? Why didn't we just go to the moon, right? Why didn't we recover back to 300s? Well, there's a lot to cover here. Okay, so first of all, this is very different than the S&P 500 inclusion. For the S&P 500 inclusion, anybody who, or any ETF that mimics the S&P 500, right, all those funds had to buy Tesla because Tesla was now part of the S&P 500. In this case, this is not the same thing. This just elevates their rating to investor grade. Now, from here, investors can choose to buy if they want, or they could just ignore it and not buy. The premise is that because this essentially allows these funds that before were not allowed to invest in any company that didn't have investor grade, they would finally come in. They would finally buy Tesla stock. But this does not mean it happens immediately like that. It doesn't happen overnight. Okay, these funds are going to think about what they're doing. They're probably going to slowly limp into it. And most importantly, I think everybody, whether you're a retail investor, if you're any of these managers, these portfolio managers that have these limitations to make sure you're investor grade, everybody's kind of waiting for tomorrow. So what's happening tomorrow? Well, tomorrow we get the jobs number. Okay, these jobs numbers are a very big deal. Why? Well, really because this is going to be the linchpin for the entire macroeconomics for all of October. It's going to be this, and then it's going to be CPI. So why the jobs number? Well, the Federal Reserve, Jerome Powell, they feel that we need to have some softness in the labor market now. All right, so we have seen some good news. For instance, recently we saw that we had 1 million fewer job openings, so that's good. But then we saw the ADP numbers that came in a little hotter than what we expected, okay? So here we go to Friday where we get the jobs number, and this number we really need to be cool because the Fed wants to see, we want to see the labor market stop being so tight. The truth is, this is sad, the truth is, they want to see layoffs. They want to see a higher level of unemployment. And so we have seen some numbers start to head that way, but we haven't quite capitulated, if you will. And so tomorrow's number is a very big deal. If we get a hot number, in other words, if we get what you would normally consider a good number, right, essentially beating expectations, the market's going to go down. All right. This has nothing to do with any stock fundamentals or anything. The market will go down if we have a better than expected number. This is a weird time where we want worse numbers than you would think, right? In this case, in this current scenario, bad news is good news. We want a bad number. All right. Ideally, we want a very bad number tomorrow, because that would mean the Federal Reserve doesn't have to keep giving us pain with interest rates as aggressively as they are in order to get their mission accomplished. Okay, so keep in mind, they have the labor market to deal with, they have inflation to deal with, and they're balancing everything right now. So with the labor market, it's not just people getting employed, it's also this jockeying for higher wages. All right, employers are bidding up all these individuals for all this talent, but now as the economy starts to slow down, you see less hiring, you see more layoffs, you start to see less job openings, and that's what the Fed wants to see. They want to see all of that start to slow down, because they don't want to get into a place where essentially salaries are this sticky part of inflation. Okay, so this is a big reason why I don't think we saw much movement regarding Tesla today. Now, there's also another element to this. The other element is Twitter. Okay, so a couple days ago, we thought, oh, that's it. It's over. We're going to have the Twitter overhang done, aka Gary Black. But here we are a couple days later, and we are worse off than what we were before Elon, kind of did a 360 and said that he wanted to buy at the $54.20 price that he had initially offered. So what's going on? Well, the truth is nobody really knows what's going on. The big thing that, and this is being updated every hour. By the time you watch this, it's probably already outdated. We've probably gotten like 7 more updates. But as of this recording, where we currently stand is that Elon Musk is saying, hey, Twitter, I want to buy you at our agreed purchase price, the agreed deal. That's it. Twitter's sitting there saying, okay, well, how do we know we can trust you? How do we know that there isn't something in here that we're not aware of that you're going to screw us over and get out of this deal? And the big thing people think might happen is that the financing might back out, and then Elon can just pay the $1 billion penalty fee and just be free and clear. Now, everybody you see, all the talking heads on TV seem to think that the financing will not just disappear. Nobody has a way to wiggle out of this. But it does seem like there is something that Elon and his team know that nobody else does. Now, the interesting thing is that Twitter actually offered to lower the price, the sell price of Twitter, if Elon Musk would agree to some contingencies. Now, we don't know what those contingencies are. It probably had to do something with making sure X amount of employees stayed on staff, or some amount of salaries, or maybe some golden parachutes. We don't know. That hasn't been disclosed. But so Elon, of course, said, no, thank you. I'll pay the price that we agreed on. I don't want to have any of that. And so then you had Twitter and Elon going back and forth, because Twitter still hung up on the fact that they want guarantees that no matter what, Elon Musk will buy the company. Well, okay, so I understand Twitter's perspective, all right? Twitter's perspective is like, look, we don't want to get screwed over. We don't know if you have some loophole that you're not telling us and you're going to get out of this. However, Elon's side is saying, well, I'm not going to sit there and commit to you if all of a sudden all this debt backing from the banks, they walk out on me. Then what do? I have to sell everything I have just to buy this. So you can understand both point of views. And so it seems like this is going to go all the way to a deadline right before the trial, which is supposed to be set for October 17th. Now, as of like 10 minutes ago, Elon Musk's team sent a letter to the judge, the Delaware Chancellery. I don't know if I just said that right, but anyways, sent a letter to them pretty much saying that they want the judge to essentially mediate everything, to go ahead and go through with the deal, etc. Twitter's pushing back, saying that there's just drama. Okay, I don't need to go into all the details. Pretty much there's drama. Twitter's saying, no, we don't need to cancel the trial. Elon's team saying, yes, we should cancel the trial. And this is the sticking point with them right now. So we have Elon's deposition now pushed back till Monday, which means we're going to hear about all this jockeying back and forth between Twitter and Elon all the way until Monday. Either they'll settle, or the deposition might even get pushed back again. All right, either way, trial is set to start on October 17th. So Gary Black still may be correct about the Twitter overhang. We are waiting for 2 things to know that the Twitter overhang is done. Number 1, we need to know the deal is actually done and it's going to happen, okay? Number 2, we need to know whether or not funding is secured if Elon is done. Part of my speculation that Twitter, and again, I'm just trying to be unbiased here because obviously I'm Team Elon, Team Tesla. But if we're being unbiased, part of me thinks that, okay, Elon Musk and his team, they do have something up their sleeve because Elon has clearly not replied to any of us about whether or not funding is secured, which makes me think he has no intention on securing funding because maybe they do have a loophole. Maybe they do have a way to get out of this. So we'll have to wait and see. Now, let's go back to talking about jobs number. All right. Tomorrow, we will get those job numbers at 8:30 a.m. If they are worse than expected, which would be good news. Remember, bad news is good news right now. If we have a worse number than what analysts expect, than what consensus expect this market to rally. Okay, I actually put up a tweet. I'll share my screen right now with you guys. Make sure I can share it here. Okay, here it is. Okay, so I put up a tweet. I'll zoom in here, and I even pinned it. Okay, so this is me kind of, just staking my reputation here, my Twitter reputation. Not that I really care about this, but you can read here that I wrote, Fed pivots before FSD beta wide release end of year. Book it. So what do I mean by that? What do I mean by the Fed pivots by the end of the year? Well, what I'm saying here is that I think that the Federal Reserve will essentially hint to the markets that they are either going to slow down with the rate hikes, they'll be done with the rate hikes, or they'll just completely stop raising rates. And I anticipate this happening before FSD beta wide release. Now, some of you might read that as being bearish on FSD beta. No, I wrote here by end of year. I still believe FSD beta will be wide released by end of year. Elon Musk does not just say that during AI Day, which was in October or at the end of September, excuse me. You don't say it at the end of September with only 3 months essentially to go before the end of the year and not be pretty damn confident about it getting to that point. So I think FSD beta will happen by end of the year. I think that the Fed will pivot before that happens. So either November or December, we will see a Fed pivot in my opinion. Now, the second the market gets a glimpse, a thought, a feeling that this is happening, get ready because we will be off to the races. You will see money get piled back into the market faster than you've ever seen. Now, with that said, that doesn't quite mean that we will be out of the woods. Okay, if you look back, I think it was 2007, we did have the same thing happen. The Fed pivoted and we did have a little bit of a rally, but then we did end up in a bear market the following year. Okay, we still went into a recession. So just because the Fed pivots doesn't mean we can't see, worse times, especially because the whole point of these rate hikes is to slow down the economy. Now, I think Tesla is a rare breed within this environment because they have so much demand, because they have crazy year-over-year growth, because they are still only 400,000 vehicles per quarter when the auto market sells millions upon millions, right? So it's not like it's going to take much for Tesla to keep up what they're doing. Now, they are growing faster, but I still think that they will be fine no matter what. The important thing here is that if the Fed pivots, if we see a lower number tomorrow, we should start to see a rally in the market. We should see essentially a bottom. This isn't me trying to time the market. I don't recommend you timing the market. None of this financial advice. It's just something to be aware of. These are data points that will be coming out. At the end of the day, what we really need to see is inflation come down. We need to see that. And it's going to get a little harder now that we see Saudi Arabia or OPEC cutting oil by 2 million barrels a day. And then we also see the U.S. in October, this month, we'll see the strategic supply get cut off, which is yet another 1 million barrels a day. So it's 3 million barrels a day that will be sucked out of the world oil production supply. So a lot of things that can change here. We really need inflation to come down, and that's going to be the biggest thing. Okay, so keep an eye out for that. Tomorrow morning, 8:30 a.m., as soon as those numbers come out, you will know what the day is going to look like. All right, if we get a bad number, which would be good news, expect the market to rally. Between tonight, tomorrow, maybe even this weekend, expect a lot of drama with Twitter and Elon. All right, the second this settles and the second that we actually know that it's going to close, we might actually start to rally a little bit. If we don't, it's probably because we're still waiting to see if Elon needs to sell more shares in order to go through with the purchase. Once that part is definitely confirmed, I would be beyond surprised if we don't see the Twitter hangover lifted from Tesla stock and we can move off of these calm lows, if you will. We're still kind of far away from what the lows were earlier in the year. All right, we're gonna leave it there. If you enjoyed this video, if this helped kind of update you a little bit and give you some heads up before tomorrow, do me a favor, hit the like button, hit the subscribe button, ring that bell. I love you all. Peace.